You're watching the YouTube version of the We Are Innovation podcast. Join us as we explore how innovation, new technologies, and human creativity improve our lives. The future is calling.
Hi, welcome to another episode of the We Are Innovation podcast. I'm your host, Federico Fernández. Today, we will discuss the intersection between investing, ESG, and Austrian economics. And for that, we are accompanied by Richard Bonugli. Richard is the founder and CEO of the Cedar portfolio, a risk and wealth management consulting firm. He has senior management experience also at KPMG Consulting, KPMG Advisory, Manulife, and Schlumberger. On the web, you can find Richard at the Cedar portfolio website. I'm going to leave the link on the description below. Richard, welcome to the We Are Innovation podcast.
Oh, thank you for having me. Great to be here, Federico.
No, thank you for your time. It's great. And, very recently, I published a piece on the We Are Innovation website in which I refer to the views of Matt Ridley and John Chisholm about innovation. And both of them, what they highlight is that a key feature of innovation is combining or recombining, technologies, skills, resources. And in that regard, I think your project is fascinating because you have created a very interesting combination, which is the one of Austrian economics and ESG. And just to make sure, that we are all in the same page, because, unfortunately, Austrian economics is not as popular as we would like it to be. I know this is a very broad question, but let's say, what are the key insights? What has influenced you the most regarding Austrian economics, and how does it influence or impact what you do at the Cedar portfolio?
Sure, that's a great question. Essentially, we have a dual mandate on our portfolio. We're looking to not only help society and the environment, but also targeting outperforming portfolio returns at the same time. So it's quite challenging, but that's our mandate. It's a dual mandate. And we use the principles of the Austrian School of Economics as our basis, as our investment philosophy and approach. We like the characteristics of an emphasis on savings and investment versus, for example, like on the Keynesian School of Economics, it's more on borrowing and spending. So, we like to take the approach of the Austrian School of Economics. And what we did is we actually did extensive research on identifying what are the principles of the Austrian School of Economics, and how can we translate that into observable metrics that we could use to identify, potential businesses in the portfolio. So like right now we have over 50 businesses, great businesses from around the world in the portfolio, and these have been identified using this approach. We actually gave a presentation on it at the central bank in Austria that you coordinated and put together for the Austrian Economics Conference there. So we presented our research results there. In terms of the intersection of our approach with helping society and the environment, we leverage a set of principles that were developed in conjunction with the American Conservation Coalition and the Austrian Economic Center. So it's called market environmentalism, to be distinguished from, say, agenda environmentalism, which takes a more agenda-based approach, and I can go into that in more detail. But yeah, essentially there's 4 principles, and you can become a signatory to the market environmentalism. One key point is, as you mentioned, significant emphasis on technology and innovation.
I will leave I have prepared already your presentation at the Austrian National Bank for our conference. I will leave a link to that. People can watch it. It's on YouTube. I will leave a link on that, and also to the market environmentalism declaration. I wanted to go there afterwards, but let's go a little bit deeper now, because it's interesting. Even you mentioned it, and you have it also on your website. Let's say you call market environmentalism as a market environmentalism without an agenda. And let's say, what do you see exactly as, let's say, the positive approach that market environmentalism brings, and what are the dangers of this agenda of when environmentalism, let's say, can become something that is more ideological than the defense of the environment?
Oh yeah, totally agree. That's a great point. I mean, what we're seeing now is a lot of hype in the environmentalist agenda. There's a lot of environmentalist zealots out there that are distorting reality and, you know, creating a false impression on many aspects of what's happening in the environment, and also where the priorities are and should be. But yeah, just to emphasize, I mean, the market environmentalism approach is more based on these four principles. So just to review, it's one is a market economy, you know, where economic success and environmental success are not mutually exclusive. They're tied together. So that's why we look for successful businesses, not only in the economy, but also that are helping society and the environment at the same time. There's also a principle of private property rights, because, you know, if you own the land or a forest, you're more likely to take, you know, much better care of it than if it was owned by the government, and especially if it is centralized. So that's the third point, is decentralization. So if you have, like, an example in the Soviet Union days, centralized government, you know, you can see the disaster that they did to the environment with all kinds of radiation all over the place, you know, getting into the food supply, lakes that were drying up. And that's because decentralized approach is much better. Those that are more local to where the problem is are more likely to have better solutions, you know, more efficient solutions, better solutions that make sense. The fourth principle is, as we just referenced before, innovation, optimism, it's called. It's added essentially on technology and innovation. So this is very interesting because it's the power of innovation to achieve real change. You know, humans are not a plague on the planet, but rather the ultimate resource. And so the idea is to bring about technology solutions. So let me give you a very you know, tangible example. I actually came up with a consulting service firm, does a lot of consulting, as you initially mentioned. So it's called Carbon Emissions Reduction Service. So this is a technology-based solution, innovation as well. And the idea is we take a mapping of what the existing baseline is of any organization, or what type of carbon emissions are they emitting, and then we'll apply consulting and technology to that. So we initially identify all of the business processes in that organization, and we see at which point in each business process there are correlated high levels of carbon emissions. And then we look deeper into why is that business process higher carbon emissions relative to others. And then we apply technology solutions, could be like business process optimization, could be robotics process automation, RPA, or AI, you know, technology-based solutions that can lower the carbon emissions. At the same time, what's happening is you're making the business process more efficient, more streamlined, and overall less costly. So this is an important point in our approach and our thinking, is environmentalism and the solutions you want to make sure that it's a positive ROI, positive return on investment. Too often, a lot of these ideas are looked upon as a cost center. Oh, I have to spend this, but it's not getting me anywhere. It's going to, you know, I'm losing money, I'm losing profit. But, you know, you've got to make it a positive ROI as well as, you know, positive on the environment. So that's a good example. of it. So you're not only saving money for a corporation, improving the P&L statement, the bottom line, but also reducing carbon emissions at the same time.
Are you currently investing in any company, let's say, that is using technology to solve some environmental issue?
Yeah, the idea is there's a few ways to look at this. One is on the side of looking at how can technology make existing or diminishing resources go farther. So these are technology firms that make more efficient use of energy resources. In other words, there's techniques in the process or in systems that will use less electricity, less energy, but have the same output in terms of usage and value. So that's one side of the equation. The other side of the equation is also looking at companies that are getting into more types of new alternative energies. One that we like a lot is fusion energy, nuclear fusion. I can go into more detail, but yeah, types of energy that can be robust, scalable, because that's a key factor. Overall, lower carbon emissions, because you have to look at the entire equation. This is an important point. Too often on the renewables, everybody forgets, well, how did you create the solar panel? Oh, we had to do mining and milling. Well, the fact of that whole mining and milling creates massive amounts of carbon emissions that is generally not taken into account into the equation. So you could turn the Earth into a greenhouse if everybody went, solar type of thing. So, yeah, we look at that, and we look at the companies that are also trying to make technology solutions again more efficient, new renewable energies. Maybe they cover different life cycle aspects, different aspects or different phases of the life cycle, like on nuclear energy. So that's of interest, and sometimes even directly in the fuel itself, like in uranium. There's a trust that we have a small position on that in the portfolio that actually represents physical uranium. So it's sort of like holding physical gold, for example.
One of the things that the many of the current members of the environmentalist movement forget is one of their Patreon saints, so to speak, James Lovelock, the ideologue of the Gaia hypothesis, and he was a staunch defender of nuclear energy because he considered it like probably the greenest energy we could have. So let's say, what else? What are you doing exactly regarding nuclear, and how do you see that issue? I think that is fascinating.
Yeah. I mean, on the nuclear energy, there's different types of nuclear. The major forms are nuclear fission and nuclear fusion. So fission is where you're taking a large atom like uranium and dividing it into two and creating energy. Fusion is the opposite, putting two smaller elements together and creating energy. It's the same way, fusion is the same way the sun makes its energy. Again, it's a controlled form here on Earth. So yeah, those are the two basic forms. The fission energy has been always a challenge because there is byproducts, nuclear waste. They used to call it, now it's called differently, and that's because a lot of the waste now has been identified for new applications, which actually increases the value chain for nuclear. So yeah, on nuclear fission, so you may have like half-lives of 10,000 years, right? Where you have to store something underground in some cave somewhere. So it's quite lengthy, and then the transport of that could be a risk. But there are, more and more safety processes, more and more safety technologies that are making it much more economical. And the byproducts can be used for potential energy generation in different forms, on the fission side. Fusion is really interesting because this is how I actually started out. I did initially some research on this back in the early 1980s. And because of that research, I was one of the first users of the internet in the world back at MIT in 1983, doing this research on fusion energy. And so, but yeah, the idea is fusion energy is scalable. So, you're not talking something like, a lot of the renewables, solar, wind can only get you so far, hydroelectric can only get you so far, small percentages, but it's scalable. So it's, it achieves the same scalability as today's fossil fuel. So that's good to have. And then there's no carbon emissions essentially on the entire value chain. So that's great as well. And it's also very relatively low cost. The fuel is very easily obtainable. Essentially, like a glass of water could supply, electricity for a city the size of Paris, say for a month. So, and everybody has access to water. So, and the first generation reactions are deuterium, tritium, that go into a helium and alpha particle and a neutron. So that is and those are two isotopes of hydrogen from water, essentially. Key point also on the nuclear fusion is everybody's talking about radiation, but fusion is the first generation reaction that I just mentioned is a neutron. So there is what's called neutron activation that elevates materials to a radioactive state. But the half-life of that is only maybe 30 or 40, 50 years. So you put that in the ground, and then after 30 years, it's as radioactive as any other metal, essentially. So it's not like 10,000 years, as in the case of nuclear fission. So, and that's the first generation. The next generation, boron, proton, is completely radioactive free. So there's no neutron activation happening. So that one is totally radioactive free. Again, virtually unlimited energy. And because of the scalability, this is what is going to get you to the electric cars that everybody's talking about and many are driving. The challenge there is if you go there now and everybody's plugged in, you're going to have rolling power outages, essentially. And this is what is happening. This is what people cannot all be plugged in at the same time. The infrastructure is not able to handle it. The energy sources are not sufficient. So you really need like a fusion type of energy source to help that. The issue of electric cars is also another challenge in itself. I mean, people talk about Tesla. Again, you got to look at the entire equation, both sides of the equation. How much carbon emissions did it take you to put together that car? It's enormous. If you do the math, it's enormous, and not to mention the materials that you need to mine. Cobalt. There's only certain places in the world on that, and it's challenging. Again, it's all the mining and milling operations. Lots of copper is needed, so it's very overall highly polluting at the moment. I mean, of course, there's more and more technology which is being applied, so that will help going forth. But at the moment, you can't really say it's more environmental than even a diesel car.
This is a broad question, sorry, and I don't want to put you, on the spot, but I would really like to know, what's your opinion about it? There is definitely, I mean, you mentioned, there is pollution. There are certain things going on with the climate. We can discuss what's exactly, but there are certain issues, and definitely there has been, pollution, contamination coming, because of what we have been doing. There are a lot of also great things that have come thanks to, in industries and a lot of things. But now it's becoming more and more like a normal statement that if we don't do something and there is I don't know, 2030, 2040, 2000, really humanity, the world will cross a tipping point, and after that, things will really make our planet uninhabitable, or almost uninhabitable, almost apocalyptic scenarios. What's your view about, without, and this is not, falling into denialism or anything like that, but are you part of the group that is really concerned? Are you, let's say, more optimistic because you see that there are things changing? Let's say, what's your evaluation and your assessment about what's going on with the climate, with the planet, and what we may expect in the upcoming decades?
Mm-hmm. No, that's a great question. Yeah, I mean, if you look at the data, everybody has their own data, but overall, if you take everything into account, I mean, there's what's called like decadal oscillators. The natural processes of the Earth are very big, and so these are happening in the background as human industry and production of whatever is happening, producing pollution of various sorts into the air, carbon gases and things like that. So, but yeah, overall, I mean, if you look at the data, it's actually cooling somewhat, the last several years. And, there hasn't been that scare that, has been in the news for several decades. We're going to have a greenhouse planet. All the coastal cities are going to be underwater. And I mean, like, carbon emissions is not the only pollution. I'll go into another example shortly, but I did want to mention that if we look at the carbon emissions, and what is a way to address that fully, like across the entire Earth. So it turns out that you only need to scale up a small percentage, essentially 5 to 10% of an enhancement in the sustainability on farmlands, rangelands, and forest lands. So if you take those three categories of lands around the world, and you address, how can we increase the sustainability and lower carbon emissions on each one. If you can make an improvement of 5 to 10%, it would basically negate all of the carbon emissions being emitted globally, everywhere, from all industry, combined, all human activity. So that's interesting to know, because just doing that, if you could just focus a little bit on that would go a long way. So it's not about, as I mentioned before, agenda environmentalism and prohibiting people from traveling, or putting everybody in lockdowns, and and all this nonsense. Essentially, you can basically address it through technology enhancement of farmlands, rangelands, and forest lands for a slight improvement. As I mentioned, I mean, carbon emissions is not the only thing in the world. I mean, we just had a situation here about maybe 500 kilometers away from a small town in the U.S. I'm in Canada here, but in the U.S. recently, there was a small town called East Palestine, Ohio, and it was a massive explosion of five toxic chemicals altogether that went up into the air, and just likely created all kinds of dioxin, although they're not even doing testing on that for some reason. But yeah, it's polluted the water and the air. You got animals dying. The people are getting sick very fast the closer you get to the epicenter. And so it's chemical pollution to the max, but it's going into the food supply now, and nobody knows what the extent of that is. So this, and what's the strangest thing is, like, where are the environmentalists? Like, there's nobody going in there. Like, are there environmental programs only about, creating carbon taxes for increasing government revenue? It's like, where are the environmentalists on this? So it's very sad for the people there. And just to illustrate too, the approach of technology could have saved this. So what happened is the train company, Norfolk Southern there, actually lobbied to remove the technology that could have prevented the train derailment in the first place. So, again, if that technology was in place for electric brakes, it would have prevented the derailment. But even more than that, they wrongly made the decision to put it on fire, and without any consideration of the environment, more for trying to facilitate to get the trains off the tracks so they can continue the business. Did they make more money in the end? No, they've already spent $8 million trying to clean it up. So just increasing the business activity for that day can't be more than $8 million. So, and even then, this is just starting. So far, only $8 million. It's likely to go much higher. Again, technology can also be applied here. So the Japanese have done a lot of research in a technology using activated charcoal to reduce like dioxin levels in the soil. This can be applied, as a technology solution, and even at the human endpoint, use of like chlorella to help chelate out dioxins and other heavy metals can also be helpful. So, I mean, there are technology solutions. But this is an example where it's not just about carbon emissions. Everybody's talking about we need to do this by 2030, by 2050. It's just and how you're going to get there. So if you go back to the question you had, the carbon emissions, a lot of these targets by 2030 or by 2050. What's happening now is they haven't identified a proper transition strategy, and renewable are not ready, essentially. So, I mean, look at Europe. You've got Germany burning coal and wood, essentially a lot at this point. And the coal is lignite, which is even more polluting than, say, the West Virginia type of coal. So yeah, it's just a nightmare. I mean, you just can't stop fossil fuels overnight. There has to be a strategy, a transition strategy, and it has to be positive ROI, as I mentioned, positive return on investment all the way, for the next 20, 30, 50 years. It's got to be positive ROI, but it has to be a transition strategy, and you just can't stop nuclear overnight. You just can't stop fossil fuels overnight.
You mentioned earlier the nuclear fusion. There has been a breakthrough recently about, finally like getting more energy than the one that you put in, which is amazing. It's very clear that, let's say, you're very much into that. It's what besides nuclear fusion, what are the, let's say, other technologies, other solutions that make you optimistic for the future?
Mm-hmm. Yeah, in terms of energy, there is a form called hydrogen, but it's not a source of energy. Everybody needs to be aware of that. A lot of people are not aware, but it is a form that can help on many different types of applications, but it's an interim form of energy. So, you need to have some form of energy initially, like solar, wind turbines, or nuclear, and that will help you to generate hydrogen. So this is another form that's being looked at. The pink hydrogen is the way that it's called for if you generate it using nuclear, and then the wind and solar also economical. Other forms like using coal or even fossil fuels are actually not generally economical. So you're actually putting more energy in than you're getting out. So that's not good. So But yeah, I mean, there's different types. Again, it could be decentralized solutions as per the market environmentalism. It could be geothermal, types of local hydroelectric may make sense in certain countries. Brazil has a lot of that. Biofuels is another area. Brazil has been leading on that. So yeah, different forms are being looked at. And I mean, what's interesting too is there are oil and gas companies. A lot of people are against fossil fuels, oil and gas companies. But look, we need to understand and recognize that they have the legacy revenue to help in the transition strategy. So you can't break them up into two like some people were doing for Shell. In out of Netherlands, there was some activist investor in New York trying to break it up into the renewable company and the non-renewable. But why would the non-renewable legacy give money for free to the renewable company? It doesn't make sense, financial sense. So again, it has to be positive ROI. But yeah, the oil and gas are in a good position to make that transition. So you have some oil and gas companies that are doing lots of sustainability, energy research in different areas, biofuels, perhaps, or even also owning and setting up nuclear fusion energy companies as well. There's 4 companies that we're aware that are currently doing that.
We've been talking about a lot of green issues, so to speak. Let's talk another kind of green, which is dollars and cents. Tell us a little bit about your portfolio. How have you been doing these last years? Where are you invested? Who are your investors? Are you getting like more institutional money? It's more like individuals. What can you tell us about that?
Yeah, so we have an approach, again, as mentioned, based on the Austrian School of Economics. So we identify great businesses with metrics that are derived from principles that we have converted those into measurable metrics, such as positive high free cash flow. We want to make sure the shares outstanding are stable or going down, but not through debt, through cash, essentially. We like businesses that have little or no debt or manageable debt. So there's several characteristics we look at, and it's all about savings and investment. Also, applying elements of scarcity is a big issue today. So that factors in. So we actually have 7 quantitative factors and 7 qualitative factors that we look at. The qualitative factors could be also the ESG, as we mentioned earlier, or economic business cycles. So we have that. We employ analysis of that on economic trends. We also have partnership with a trading room where Ira Harris, our chief investment strategist, is there. He's our research strategist, his title, and so he helps to have discussions on where the economy is going, what makes sense. So yeah, we that's basically our approach, and our performance has been great, and we've had like annualized returns of 16-18% annualized over the last few years, and we've actually had outperformance in risk on years like before last year, and also risk off years last year, for example. Outperforming, S&P indices, industry benchmarks. So yeah, we've had a good story so far, and the performance we look at not only for price performance, but we're looking at companies that are also doing well on helping society and the environment at the same time. We look at the 17 UN Sustainable Development Goals as being noble to look at, but we don't make that our agenda. So that's very unique among everybody, that is a signatory to the UN PRI. principles for responsible investment. So we're very unique there. And and we have businesses from around the world. We look at both developed markets and developing world markets. A lot of the businesses we look at maybe overlooked by some investors. So we're always looking for value. And you can say also that our approach is very value investing based. This is a major secular transition that we see happening now from sort of tech or growth type of equities into value-based equity. So we're very well positioned for that secular change as it is happening now.
In the last year or so, finally, we have been seeing this. Let's say, finally, interest rates went up, and it's not that somebody throws you money for whatever you want to do. How are you navigating that? And sorry, I'm not asking you, let's say, to see the future, but do you think the rates will continue to go higher? And another thing I would like to know your opinion on is about inflation. Has inflation come back to stay for a while, or will face deflation again soon? How do you see that?
Yeah, I mean, currently it's sort of going down a bit on the inflation story, disinflation, if you want to call it that, for the first several months of the beginning of this year. I think later on in this year, we'll likely see inflation come back strongly, and maybe even higher than last year. So it's more of a cyclical thing. If you look at, same thing happened, for example, in the 1970s. So yeah, it's it's jurisdiction dependent. You have some areas of the world that have lower deflation than the US, for example, or so it just depends which jurisdiction. Looking at Brazil, has come down significantly, for example. And the interest rate thing, there's a lot happening. We look at geopolitical trends, geopolitical risk. The Chinese have been selling a lot of U.S. Treasury bonds for like over a year now. They're worried about being in the same position as what happened to Russia. So a lot of this is happening. There's also the idea that you've got quantitative tightening in the developed central bank happening, but at the same time there's more of an inflationary fiscal stimulus on the fiscal side. So maybe you might have situations where monetary policy is more strict or tight versus fiscal policy, which is still loose. And the idea is that in the end, likely currencies will be sacrificed in order to keep interest rates reasonably well balanced. There's the whole concept of financial repression, which is one of the big themes on our podcast program show. No conspiracy theory here, but the idea that we had repressed interest rates for a long period of time. But now with the immense debt, particularly in the indebted Western world, U.S., Canada, Western Europe, Japan, the concept of financial repression using inflation is now at the forefront. So the idea, if you have 4% inflation over a 10-year period, if you do the math, the burden of the debt goes down by 1.5. That is basically how the math turns out. So it's actually in the interest of governments to have higher inflation to reduce the burden of the debt. I mean, you have a situation now where the interest rates keep rising, but how much more can they rise? They can't rise much more. The U.S. is now approaching almost $1 trillion a year just paying the interest on the national debt. And the budget is, the amount of collection is only maybe $3 billion or so. So it's getting to be quite substantial, almost like almost being unable to make the minimum payments on a credit card is essentially the analogy here. So yeah, I mean, eventually, likely, there'll be more forms of financial repression. There'll be probably institutions, savings, like federally regulated institutions forced to buy more bonds. I think it's likely that governments will change the rules on registered accounts. Like in the US, you have 401k, IRA, in Canada, RSP, RIF. So these type of accounts, maybe the rules change so that governments mandate you must have 50% of your assets in federal or provincial or state government bonds. So, this would bring in trillions, right, to buy bonds. But it wouldn't be good for the individual, right, in terms of a loss of purchasing power. I mean, you have interest rate risk, currency risk, credit risk, all at the same time happening in a negative sense, right? If in that situation. So yeah, everything is changing pretty fast. And but I think more and more forms of financial repression will happen because of the unsustainable government debt.
And Richard, before letting you go and really thank you for your time, you're a very busy man, and we're happy that we could spend almost an hour talking with you. And I hope there's more opportunities in the future to keep talking about these issues. But I believe, I'm quite sure your fund has a position on gold, correct?
Yes. So the way we do that is we do quarterly rebalancing, and we try to keep it at 5% physical gold and 5% physical silver. In addition to a few other physical things, I mentioned physical uranium, a small position there, and physical palladium and physical platinum. These are held in the form of trusts, in particular gold and silver, where it's backed by gold or silver held at the Canadian Mint. And so it's basically the next best thing to holding, to having the physical in your hand, but it's essentially that, as close as you can get. So much better than these ETFs, which have force majeure clauses. You may not get the benefit of a rise, or things may happen that you're unaware of, that you might not, get what you're at. And so, yeah, it's some great features that these trusts have that we're in. But yeah, we look at 5% gold, 5% silver.
And Bitcoin or any other crypto?
No, not on those. Our view on that is, while they're very great technologies, and we really firmly believe in the blockchain-based applications of the future, we don't think that governments will generally allow private-based cryptocurrencies to coexist along the government-based cryptos, also called central bank digital currencies. So that's a great question, because the idea is either the private-based cryptos will be outlawed altogether by some governments. Other governments will allow them to coexist, but they will need to be heavily regulated within the banking system and the financial system. And even now, like, only a few will survive in any case, because most are like government fiat type currencies, right? You can continue to print them ad infinitum. So, maybe 98% will go out of existence, with the remaining 2% outlaw or out to coexist, but, under strict and increased, very heavy financial and banking regulations. One thing I would like to say is we do have an initiative to work with providers where we can be the research consultant to a digital security token offering based on our portfolio, based on our index, that you would essentially have an ownership through a digital security token of the businesses, and this would be on the blockchain. So the vision is that you can hold a digital security in the form of a token on the blockchain as a way for hopefully wealth preservation, preservation of purchasing power. Those are our target objectives, of course. And the reason is because, when you want to hold this type of asset versus having your asset in a central bank digital currency that is subject to a lot of issues that many have been talking about recently in terms of, control or loss of freedoms, even by these central bank digital currencies in many different ways. So you want to limit the assets you have in the central bank digital currencies is the vision. And at the last minute, you can sell a fraction of that token to pay bills, electricity, buy some food or whatever. So that's our vision, is positioning also for the future and how it may come about, and in looking to target outperforming portfolio returns, targeting preservation of purchasing power, and targeting wealth preservation.
Richard, thank you very much for your time. It's been a pleasure talking to you. To everyone who listened to this, don't forget to like, subscribe, and leave a review on whatever platform you're getting our podcast. And we'll meet again in another episode of the We Are Innovation podcast.
Thanks for watching this episode of the We Are Innovation podcast. Don't forget to like and subscribe. To know more about We Are Innovation, visit weareinnovation.global.